Okay, so the S&P 500 index is triggering a bearish reversal pattern today for the first time in many months and the first one in 2023. This is particularly scary because it works as a bullish rejection structure. In the weekly chart, the index did trigger a nice bullish pivot point by doing a higher high, higher low for the first time since the bear market started in January 2022. Now we see bearish pivot point in the daily chart after a false breakout from this bullish pivot point in the weekly chart. This is not good and might indicate that the index has more to correct from here. Where the next leg down could take us and what kind of reaction the S&P 500 would have to do in order to turn bullish again and frustrate this bearish sentiment? We'll see in this video. Welcome to the Finance Hydra channel. My name is Nathan. Let's start our technical analysis on the S&P index. In the daily chart, yes, we did trigger a bearish pivot point. We lost the 40-60 and we did a lower high. Now, this is a pivot point, a bearish pivot point. We lost the 21 exponential moving average as well, indicating that yes, the sentiment is turning bearish in the midterm in the daily chart. Now, we just hit our technical target at 40.15, which is this red line over here. If the S&P does any good, and must be very good, bullish reaction above the 40.50 over here, this red line, I think then it might have some chance of reacting and maybe it could frustrate this bearish sentiment. However, right now we don't see any meaningful bullish reaction. The S&P is just bearish right now. In addition, it did this bearish candlestick pattern over here after a dragonfly doji from Friday. Friday it did a dragonfly doji candlestick pattern closing above the 40-60, closing above the 21 EMA. So that was a quite nice bullish reversal pattern. However, this pattern was not triggered in the first place and the S&P lost this pattern's low. It lost the 40-60. It just continued the bearish sentiment, indicating that no, there's not a single bullish evidence right now on the S&P. It is just bearish. And this is quite frustrating because in the weekly chart, we did trigger a bullish pivot point. We broke the 4100 over here. By breaking the 4100, the S&P triggered a bullish pivot point. For the first time since this bear market started, it did a higher high, higher low. Now we are completely rejecting this pattern and indicating that we could drop to much lower price levels. So we hit the 40.15. What if we don't react over here? What if we keep dropping? In this scenario, the S&P will drop probably to the 38,700 area down here. That's our next technical support level on the index. In addition, yes, we have this purple trend line which did work as a resistance level for the index 1, 2, 3, 4 times. We broke this resistance. Now, it could work as a future support level, but in my humble opinion, if we drop by losing the 40K, I think we could drop to lower levels because in the monthly chart, the area around 3800, around 3700 is the next support level over here at the 38.2% Fibonacci's retracement. Only if the S&P loses this retracement, the first retracement over here, we could correct to much lower price levels. Right now, midterm speaking, looking at the daily and even the weekly chart, we see that a correction to the 3800 is totally plausible. However, long-term speaking, in the monthly chart, a correction to such levels would not be the end of the world. We must lose this retracement in order to materialize a very sharper correction, probably to retest the next retracement, which is the 61.8%. See, we hit the 38, we bounced, we lost the 38, we hit the 50% retracement, we bounced again. Now, if we lose the 38%, again, for the third time, in theory, it would seek the last retracement at the 61.8%. Keep in mind, this is the monthly chart, so it is going to take a few months for this movement to materialize. However, right now, we should just pay attention to the 38.2% Fibonacci's retracement. Now, before we take a closer look at the weekly chart, remember to check my website and join the top 5% family. We are the family of traders that can actually make money while beating this market. Join us, check my website, public track record. The link is in the description of this video. Now, in the weekly chart, let me change the chart over here. In the weekly chart, what is the problem with the S&P? The problem is it did many impressive bullish indicators. I mean, we did trigger a bullish pivot point. We did a classic golden cross pattern over here. The 50-period moving average did an upwards breakout from the 200 moving average. This is the most famous and classic indicator that the trend is reversing. Right now, the S&P triggered a bearish pivot point in the daily chart, but we are still above this moving average over here. This is why I'm telling you guys, if the S&P is about to react, is about to resume the bull trend, right now is the best moment for do that. The timing couldn't be better. We are just at the 4K, which was a previous resistance level for the index over here in the daily chart on January this year. We are just above the 50-period moving average as well after the golden cross materialized. So the S&P has to react as soon as possible in order to avoid a sharper correction to the 3,800 or possibly to lower levels if the bear market continues. So either way, we're gonna have our answer soon, potentially this week. Of course, I'm gonna keep you guys updated every single day on this channel. So if you're still not my subscriber, come on, subscribe this channel, join the Finance Hydra channel community. I really appreciate your audience, my dear friends. Stay safe. See you guys tomorrow.